Hello, welcome to class. Today, we are going to be talking about financial interdependence and what it means for us as social workers and social service providers. My name is Jeffrey Anvari-Clark. I'm an assistant professor at the University of North Dakota, and I do want to acknowledge very gratefully that Michaela Gates helped to lay out and organize and edit this presentation. Thank you, Michaela. I also want to give an acknowledgement to the University of North Dakota's College of Nursing and Professional Disciplines for their gracious and funding that they have provided through a seed grant for this presentation to be made available. Thank you. Before we dive in, we need to take a step back and do an acknowledgement. I want us to acknowledge that the work that we discuss today takes place on the traditional and ancestral lands of indigenous peoples across the continent. We recognize then that the ongoing impacts of colonization on indigenous communities' economic systems, including disruption of traditional practices of reciprocity, mutual assistance, and collective resource management. And so, as we explore financial interdependence, we need to honor the indigenous systems that have long understood what Western financial paradigms are only beginning to recognize, that individual well-being is inseparable from collective well-being. Let's keep that in mind. So this training is going to be about 60 minutes. And so we'll give a little bit of an orientation to the concept of financial interdependence. We'll talk about some of the core principles that we've already hinted at in our acknowledgement. And then we're going to talk a bit about how we shift our mindset as social workers and as social service providers from being an expert to one of being accompaniment and why this is so important. And then we'll talk a bit about how to apply it within the scope of our practice. So after this webinar, you're going to be able to recognize how what we traditionally think of in terms of financial independence and these paradigms really limit our effectiveness as social workers, and it perpetuates unjust power dynamics, especially when we have diverse clients or even with clients who may look and speak like ourselves. We are doing them an injustice. Think about that. We'll also identify how principles of reciprocity, cooperation, and mutual assistance are going to guide and do guide interdependence in the client's worldviews. And then we'll learn how to apply this accompaniment approach to improve our practice overall. Let's start with a little bit of a vignette to get us grounded and to think about conceptually and perhaps a little anecdotally how financial interdependence actually works. So we've got Maria. She's a 34-year-old Latina, mother of two. She comes to your social service agency after falling behind on rent. So she works full time in retail, but sends $200 monthly to her mother who in another state who has diabetes. Okay. Now, she also participates in a tanda or a lending circle with some friends. She has $800 in savings, but is waiting for her turn to receive the tanda payout next month. Now, if you're not familiar with what a tanda is, say you've got, it's an informal lending group. Maybe there's 10 people. Each person puts in $100 each month, and of the $1,000 pot, then one person in turn will then get the pot. So it's a social entity. It's also a lending and savings entity. These are generally informal, but virtually every culture around the world has some sort of version of this. They'll go by whatever name, is from within that culture, but we call these rotating savings groups or lending circles. Now, If we are adopting the expert approach around and assuming that we should be aiming towards financial independence, then approach A would be kind of that expert where you're going to tell Maria, "Hey, Maria, you need to stop sending money to your mother until you're financially stable because that's undermining your ability to save. The Tonda is risky. You should keep that money in your savings account. Here's a budget worksheet. Follow these steps to financial independence." Now, uh, we might also approach the working with Maria in a different way. And this can be more of what I term the accompaniment or accompanier approach, where we start simply by asking some questions. Tell me about your mother's situation. What does that mean? What does that mean to support her? Um, how does the Tonda work in your community? What financial goals are you working towards? Who in your life is helping you work towards them? So, with the company approach, we are exploring, we are seeking to learn and to understand with really open questions without judging. We're not assuming we know about her situation. Now, if we kind of think about the expert approach, which we may be employing, within our social service agency, and the structures within our agency may dictate that this is how we have to do it. But which approach honors the reality of the situation, and particularly Maria's reality? And which is going to build on her strengths and thereby actually have a much more higher chance of successful outcome when she comes to us for assistance. So we need to explore those, and so this is really a lot of what we'll be working through in today's presentation. Now, there's a problem, and it's what I determine as the financial independence paradigm. We live in a world where all of the conversation is around financial independence. Perhaps you've heard of the acronym FIRE, to be financially independent and to retire early, FIRE. So, this idea of this individual responsibility, you got to be self-sufficient, you got to pull yourself up by your bootstraps. If you're dependent on anybody, you're a failure. And if to be successful means to be completely autonomous. And it ignores really, these systemic influences where, maybe you do have a history of having received some supports or other structures are working towards you or against you. Now, the problem with all of this is that it misses a lot of the cultural values of collectivism. Now, you may say, "Oh, I'm not a collectivist. I, operate within an individualist paradigm." Okay, you can say that for now. But, at the same time, there are people who work within a collectivist paradigm. So you got to take that at face value. Now, the existing networks of mutual supports that they have, it ignores this reality of interconnected financial lives. People are sharing money all over the place, and there's strength in that. There are power dynamics also in helping relationships. Sometimes they're bad, sometimes they're good. So the result here is then that when, as a practitioner of social services, social work, we are often positioned as experts within our nonprofits or our government agencies. And so people come to us and they, say, "Oh, hey, I need the answer." A lot of times clients are positioned as deficient or lacking in skills. And so we maybe propose solutions because this is the good financial solution, but it may conflict with cultural values. And so we've got these interventions that we might come up with that ignores existing resources, and there's going to be some power over dynamics that are going to undermine trust here because they don't feel heard, they don't feel trusted. So as a result, we've got a big mess that we're sitting in. Now, what do we do about all of this? So there is something called financial interdependence. This is a very broad reality, and it's something that frankly, I would say we're all dealing with and we are all working within. Now, financial interdependence, or FI, as I abbreviate it sometimes, it's not an exception. It's not a deviation. It's not something only people of color will engage in. Everybody engages in it. This is a reality of how people navigate financial life across all cultures, across all income levels and contexts. How they do it, there's going to be infinite diversity there, but that they do it is universal. Now, that universal part is within our thinking. So this comes from interdependence theory in psychology. And so you've got a financial situation or the given situation. And then you've got the relational impact. So it's not just your um, financial issue that you're trying to think through, but there's also how is this, decision that I make going to impact my wife? How's it going to impact my family members? What are they going to think about it? Those types of relational considerations are what make this interdependent and not just independent. We're not just a bunch of individuals floating around in space. Now, financial interdependence can be perceived as a choice, in which case it can be something very liberating. It can be something where we can build safety nets and work together and collaborate. It can also be an obligation, especially from some of those collectivist oriented groups where there's an expectation that you send remittances back home, where support your elders in their time of retirement. And so there's perhaps an obligation there. So how it shows up, there's a wide range of variety. And so with those practical aspects, it can involve financial transfers, maybe, support on the first down payment of your home, or, sending money back home to the family that supported you to get your college education. There's informal savings groups like what we experienced with Maria. Uh, Exchange of caregiving, sharing kids' clothes among, friends, uh, housing sharing, resource pooling, various other forms of support. So these are all examples of financial interdependence and how it can show up in our lives. Now, to that end, it is absolutely crucial that just as a social worker or social service provider, you need to have a good understanding of your own gender identity, your own racial identity. You need to have a good understanding of your own financial identity as well. And so I would say, take a look at some of these questions, pause the video if you'd like, and ask yourself, growing up, how did my family talk about money? Did they at all? Or was this something that was totally hush hush? Was it open or private? Was it taboo? What messages did we receive about sharing money with other people? Was it something that was expected, that it was freely done? Was it generosity? Was it only within certain contexts? Was it only to people who deserved it? Um, how did you determine what was deserving? So that was kind of, for you growing up. But then now in your adult life, how do you practice it? Who do you share resources with? Do you share it within the context of a nuclear family or perhaps a little bit further abroad? Who supports you financially or in other ways materially? And so how do your relationships influence your money decisions? Are you just deciding to go buy something without regard for, how other people might be thinking about it? And then the third step is taking this to your professional context. How do those experiences shape your worldview and shape your understanding then of your client's financial practices, of what is right or what is wrong, what is good practice versus inappropriate or irresponsible practice, and what's behind it? So take a moment, pause the video, think about that for a few minutes. Alrighty, thanks. Moving forward. So Now that you've thought a little bit about what financial interdependence is and how it shows up within your own life, and how it potentially can show up in others, we're going to explore three core principles here that guide financial interdependence. And so this is the idea of reciprocity, cooperation, and mutual assistance. Now, both you and your clients participate in these principles. I've already said that. I want to underscore it, and I will continue to underscore it. However, how you engage in it, what these practices may look like, there are going to be some differences there. But hey, don't be surprised if there are actually also some similarities. But it is going to look different usually based on socialization and context, where you are socioeconomically, your racial identity, your cultural identity, how much education you have, how much earning and money that you have, these kinds of things. So it's going to look different. So there's going to be an infinite diversity there, but the point is we all engage in it. Now, to the extent that we all engage in this, you as a professional, perhaps, you do it where you're splitting bills when you're out at a restaurant with somebody. You have perhaps workers' insurance, and group insurance is where you're pooling the risk. So that's a form of interdependence. If you buy individual insurance, it's a lot more expensive. Uh, Family support. So, do you help your kids out with, car payments or getting tires on a car or, maybe with rent if they're a little bit older? Um, are other people helping you out with childcare payments, things like that? So, there's definitely going to be some supports that perhaps that you are experiencing and benefiting from, and as well as contributing to. Maybe you're part of a sandwich generation where you're taking care of your parents and your kids at the same time. Now, your clients and the community, is if they are people of color, perhaps they are engaging in lending circles or sending remittances back home to their country of origin, or simply across state lines. Maybe they're sharing housing and sharing some of the caregiving and the food. So there are going to be some differences, or perhaps you are engaging in some of all of these. So. They do, they're not, mutually exclusive here. Uh, so there's going to be different expressions. However, they're all based on the same principles, and that this is an expression really of our shared humanity, that we engage in all of these in some way, shape, or form. Now, to get to principle one here, this idea of reciprocity. So reciprocity has to do with this mutual exchange over time, where you're giving and receiving within relationships. So there's an ongoing back and forth. It's not a transaction, although sometimes it is, where you're actually keeping score. But it's really more of an ongoing flow of support in both directions. So perhaps in your life, reciprocity would say, maybe you're paying for lunch and the colleague, maybe they pay next time. Maybe you help a friend move and they help you later with something going on. Um, Perhaps, you help a friend with, some financial issue, and then they help you by fixing your heater. Who knows? Um, Being mentored and then paying it forward. So, there's a lot of different ways in which reciprocity can go. And sometimes it's financial, sometimes it's, in skills, and sometimes it's in other ways. Now, reciprocity in our client communities can be, the same way. Perhaps today you and tomorrow me, within a mutual aid context. And, childcare, I watch your kids and then you watch my kids. Maybe, I'll provide some elder care in exchange for some housing. So, so there's a lot of that's going on here. And I think one of the important pieces here is that dignity then stems from being able to not only receive, but to give. where a person has that opportunity to give. And so thinking in terms of, well, how do I give as a helping professional? How do I receive? How do I allow the other person and create space for that person to give and to receive? So when we have employ these principles of reciprocity within the helping relationship, it's, resources are not then flowing in only one direction, from the expert to the recipient, but rather it begins to shift where there's an ongoing exchange of resources and ideas and contexts and things like that. It may not all be financial, but there is a reciprocity going on there. So I think that's one of the important things we want to start focusing on. Now, so within that helping relationship, we're shifting away from the power over dynamic of advice giving and the one-way flow, helper as the expert, with the client being deficient. And so we start thinking then, okay, well, what are maybe some contributions that the client can give? And so when we accompany, we're sharing learning, maybe we'll share personal experience of, hey, this is what I do. I know that people maybe from your culture do this. Is this something that you also practice? Um, but talking with them about their expertise, listen, and seek to collaborate with them. And so asking, what do I and my organization need to share first, of ourselves? And perhaps it's simply being a listening ear. What do I need to learn from the client's experience before offering support for their situation? So this requires deep listening. We need to ask about what the reality looks like. What are some of the existing practices that are engaged in? And these may be very culturally rooted practices, in which case then we're probably not going to change them. But we need to figure out how do we navigate through them. So, learn how some of these communities will manage their own financial challenges and how they have been doing it for a while. And that the client really is an expert in their own context, and how do we then navigate this challenge that they've brought to us, with them? So that way they can, be the change that they need, as well as then, if affect, whatever transformation needs to happen in the community or in the family. When we talk about cooperation, this is that collaborative problem solving that asks what's best for us rather than what's just simply best for me. When we cooperate, we have we recognize that a financial decision does not operate within a vacuum. So it goes back to that interdependence, uh, paradigm and mindset, that it affects multiple people, whether we want to recognize that or not. And so, whatever solutions that you are proposing for a client is going to have a ripple effect. And so we need to make sure that these solutions work for the whole networks. We need to collaborate to produce stronger outcomes. And as a result, when we focus then on the collective well-being, it's going to support the individual well-being because because these networks are so intertwined. So I want you to, focus and think, reflect on cooperation in your own life. What does it look like? Perhaps you're engaging in, major decisions around a purchase with your partner and having, financial conversations about finances, these types of things, or, within the professional context, collaborating on cases. Then, cooperation in the client's community could be multi-generational household budgeting and shared elder care and, community organizing, collaborative savings groups, and these types of things. So there's a lot of, cooperation that goes on, and this is how stuff gets done, and can get done much faster, much easier, and with much less onus on one individual when we've got a whole group helping to contribute. Now, the implication then is that when we are exploring cooperation, we're shifting from that expert approach where we just simply say, here's what you need to do. We don't approach financial education in a very generic way, but perhaps in a much more tailored, context-specific way. We want to focus on solutions that are not just geared for the individual, but recognize that there's going to be shared decision making that has to go on here. And so we may need to consult with the larger family group. And recognize that the relationships are going to be need to be centered within that process rather than ignored. So we need to ask and, talk with the clients. Who else is going to be involved in this? Who is this going to impact? Ask about, some of those family processes and honor also some of the more collaborative practices that are already going on, because that could then shed light on some opportunities to create new solutions that are actually going to strengthen the relationships. So rather than simply telling them you need to move to a cheaper apartment to save money, as if there were ever a cheap apartment to be had, um, you can, try asking, just simply who lives with you? How do you all contribute to the household expenses? And it may be, with money, or it could be, with providing care or repairs or things like that. And so ask them then, what would moving mean to those relationships and the arrangements? Maybe they would have to start from scratch if they left, and life would actually be a lot more difficult than what it is currently. So we want to explore a lot of different options, and you need to do that with an open and safe environment with the client. The final principle here is this idea of mutual assistance. So with mutual assistance, this is the practice of supporting each other through challenges, particularly within, a resilience context. Um, and so, it really recognizes, hey, financial shocks happen to everyone. Stuff hits the fan. How well we're able to deal with it is dependent on how much money do we have, on hand that we can simply absorb and the problem that we can throw at it to make it go away, or do we have networks that can help us to resolve it? And so these networks then provide a cushion and support recovery. Uh, and so the community has a resilience that will exceed that of the individual. And so recognizing then that helping others will strengthen the whole system. So when you need to call in and make a claim on your insurance, again, it's a pooled risk. Maybe you get a loan from, a family member or a friend. Sometimes people will do GoFundMe contributions. There's, community disasters, and relief efforts that maybe we will contribute to, or maybe we have to benefit from. So there's a lot there in terms of how you might be addressing and receiving mutual assistance. At the same time, the client may, need to borrow money from the tandem members, uh, supporting a family during somebody's job loss, going to, sharing food, whether individually or at a food bank. So there's a wide range of things. And then, there's also the remittances that oftentimes will have to get sent to help family in perhaps other countries where there's some sort of disaster that's going on. So moving from this idea of being financially independent, and you need to have your own emergency savings, and not to say that, having emergency savings is not important. It is, absolutely, but it has to be situated within the broader context. And this idea that you don't want to rely on others, that isolates you, okay? And it cuts you off then from the existing supports that you have. So we don't want to do that, but we want to strengthen the supports that they already have. And so we want to then shift some of these support networks to to map them out and to see, all right, how are they working? How can we leverage them to work better? Who provides assistance? We want to build on rather than replace some of these informal supports, and get them connected to other resources that may be there while honoring the relationships that they have because they are so important. And so, rather than just simply saying, well, you need to save on your own, you can say, all right, well, when financial emergencies happen, who do you turn to? How does that work? Is there a way in which you can save for yourself as well as contribute to others? What other resources might, complement some of those relationships? And so how do we build then a cushion that's going to be beneficial for everybody? Now, a lot of times there are going to be barriers to achieving financial interdependence, or that the interdependence itself, as I said, sometimes it's an obligation or even a burden. And so it's not all rainbows and butterflies. And on the one hand, achieving financial interdependence uh, or achieving a recognition of financial interdependence stems from a lack of conscious awareness. We don't talk about it. Instead, we talk with this narrative of financial independence. And so we've got this materials paradigm, within our culture of independence. And so interdependent practices then become, either invisible or they're stigmatized. We're trained as professionals in these individual focused models. Clients may not want to, kind of articulate their interdependent frameworks or know to, or think that it's actually going to be helpful when soliciting assistance. And so a lot of times these cultural practices will go unrecognized and unseen. At the same time, a lot of times people will be engaging in have experienced trauma. And so, these different forms of trauma, be they personal or relationship based, or having experienced violence, or health traumas, or even financial traumas, all of these can have an impact on the individual, their ability to engage in executive functioning, and thereby their financial situation. And so they oftentimes will make certain decisions that, as the social worker, you're kind of scratching your head over and saying, well, why are you making that decision? Well, it's based from a scarcity mindset. And as a result of that unresolved trauma, they're not going to be able to move forward and to make the decisions and to engage in the behaviors that are in which they're able to think through some of the more positive ways and think through the implications of a situation apart from how do I keep myself safe right now. So there's going to be a complexity. And when other complex issues, such as financial issues, because financial world is incredibly complex, then a person who's been experiencing trauma, trying to navigate that becomes really, really difficult. I mean, it's difficult for the best of us. And so we become paralyzed as a result, especially then when it's combined with unresolved trauma. And so part of our work as social workers and social service providers is that we have to also engage and make sure that the client is healing from this process, in addition to receiving the financial support that they came to you for. So, making sure that that healing part is part of the process and not just assuming that it's not there and actually harming the trauma and re-traumatizing the client. So first, we need to engage in safety first work here. We need to recognize that interconnection between trauma and finances. We need to also, recognize here then that the accompaniment is a much softer approach. It's a much more relationship-based approach. It's not punitive. It's not where we're leading with our expertise. So we need to listen. We need to validate. We need to work at the client's pace, and then get them connected to the services that they need. And just to the point here, and because I've heard it, because I've seen it, and because I know that it's out there, not necessarily because you are doing it, but we cannot just simply say, well, people need, they need to budget. They need to learn how to engage, and better their finances. They need financial literacy. They need financial education. You can't use that to get somebody out of trauma, and you can't use that to get somebody out of poverty. These are much, much deeper, much more complex. And so when we create that space for the healing, it also then creates then the ability for them to begin to engage in some of the financial empowerment that is needed. Um, but this empowerment and this capability building is more than just knowledge. It is deep behavior change, and behavior change takes a long time. It's not something that comes about with a simple class. It's not information based, because you can know something, but do you do it? And that's something that we all struggle with in our lives. All right. So when we are shifting this model of going from expert to accompaniment, um, this is, you're reducing the I have the answer before I even know what the question is. And so it's something where we explore together. Um, we don't tell the client, well, you're the one who needs to change. We focus on building on their strengths. We are, we don't just put out advice that we blindly expect them to follow. We put together something that's going to work for them, in terms of what's going to work in their context. Uh, we move from this idea of individual responsibility to a collective responsibility. Responsibility is important, but it's also within the broader context. And we shift from this idea of having power over somebody to having power with somebody, and power as a capacity to achieve something together. So we're not going to fix a client. We're not going to fix other people. We're not going to save other people. But rather, we're going to walk alongside folks in their financial reality to think about how do we, and together, how do we improve and collaborate to create for a better situation. Now, we touched a little bit upon, some of the importance of that self-awareness. And so, in as much as we are bringing our whole selves to the client relationship, we need to understand our own financial socialization. There's a lot of tools out there that can be used. So I would encourage you to use some of those assessments to learn about your own financial socialization, both in terms of your habits and beliefs and your behaviors, where they stemmed from your early childhood experiences, um, and later experiences as you've been growing up and getting older. Recognize what you currently do in terms of financial interdependence practices. Acknowledge some of your blind spots that you may know about or not know about, and know that they simply may be there. Then seek to understand the client's reality and shift, the locus of perspective onto the client. We need to address, their reality in order to address their needs. You cannot accompany somebody through a territory of financial interdependence if you refuse to acknowledge that you also are part of that territory, and that you are also engaging in some of these behaviors. Maybe that they look a little different, but you need to recognize that. And so, there's going to be differences, but there's also going to be the potential for a lot of overlap. And to the degree that we can acknowledge that, then you bring your authentic professional self to the relationship. So as we are working then with the client networks, we need to understand and ask some questions that are going to honor that financial interdependence. So, as part of our intake process, we may need to ask, well, how much do you earn, or what are your expenses? Do you have savings? And these expenses, we need to, expand those a little bit more, not just for keeping one's own household afloat, but others' households afloat. Where else is the money going? Are they paying for medications for mom who lives someplace else? Who else's, financial well-being do you feel responsible for? Who helps you through challenges? And so how do decisions get made within the family? Because there may be, the client may be incredibly responsible with their money, but somebody else is, impacting and making for a challenging situation because they keep spending money out from under the client's efforts. Hmm. So we need to get a really good sense of what all of that picture looks like. And you need to have an honest and open conversation where they're trusting and they feel safe to be able to share that information. So those are a lot of, just some of those questions that you need to be asking, really ultimately, determining what's the reality. So, to the extent that we can make visible the financial interdependence that's already operating, to the extent that we understand the reality, then we've got a better assessment of what's happening, what needs to happen, and what we can do about it. Because if you don't understand the reality, then you're going to be operating in a vacuum and you won't really be able to achieve much. And you'll miss what the ultimate problem is in the first place. So, in order to do this, we need to start with listening. You need to validate the existing strengths, collaborate on your solutions. Don't impose solutions. We can explore the use of tools, but talk with them about, well, what have you tried? What haven't you tried? What's already working well for you? And acknowledge, really, this stuff is complex. These are complex situations. These are not easy, especially when we bring in other people. Things get messy really quickly. And so we need to figure out, how to be patient um, and learn how to navigate that. So just to kind of give you some examples here, we've got James, he's 42, he has $3,000 in credit card debt. He also sends $150 to his month and to his mother, and he co-signed on his sister's car loan because she was denied credit. As a result, his own credit score is dropping because of the high utilization. Now, you could say, James, you need to stop bailing out your family until you pay off your own debt. Your credit score is suffering. You can't pour from an empty cup. Focus on your own financial stability first. Well, James may not be able to do that if he doesn't want to cut mom out of his life or his sister out of his life, and that may not be acceptable. So instead, perhaps what we need to say is, all right, James, tell me about your responsibilities to your mother and your sister. What would it mean for those relationships if you stopped helping? How do those obligations fit within your own financial goals? Let's map all these people out and the obligations in your financial network and see if there's ways in which you can manage everything that both honors your relationships and improves your credit health. So is there a way we can do both? So that's really kind of seeking that both and approach rather than just simply cutting it off. You have to do this. So think for yourself, what makes that second approach difference? How does it honor James's reality? And what might emerge then from the collaborative conversation? So you pause for a second and think about those, maybe jot some answers down. Alrighty. The next one, we've got Aisha, who's 28. She's Somali, and she participates in an informal savings group with 10 other women from her mosque. Each contributes $100 a month. Members take turns receiving the $1,000 payout. She comes to you for help budgeting because money is tight some months. Um, Now, she may say she needs help budgeting. Chances are she may already have a really good approach to budgeting, and it's just that she doesn't have enough money coming in. So people will say one thing, but you need to kind of really dig deeper to see, well, what's actually being needed, moving beyond simply what's being said. Okay. So you can say, well, Aisha, that savings group is risky. What if someone doesn't pay or the leader takes, the money? Um, you can put that $100 in a high yield savings account instead, right? Well, okay. That's problematic on a couple of different levels, especially if there's interest being earned here. Because if she's living according to certain level of uh, obligation within, as a member of the Islamic community, she may not be able to actually be earning interest on her money as a religious law. So right there, you're exposing some of your ignorance. Um, Instead, what we want to do here is to simply ask, all right, tell me about the savings group. How long have you been participating? This could be a huge source of social support as well for her. What have you used the payouts for? How does the group ensure that everyone pays? What does this practice mean in your community? So let's look at your budget, with these contributions included and see where we can find some flexibility for the tight months while you contribute, and continue to this important practice. So we're honoring the things that are already important to her and figuring out, okay, what can we do with them rather than trying to stop them because we don't understand their significance on multiple levels and we don't come up with then some idea that may actually be even worse and for her. So we've got points of cultural knowledge that need to be honored here. Um, how does this build trust? And what are some of the things that, as a practitioner, you might need to learn or that you can learn even within this uh, this conversation? So you can pause, give some thought to that. Alrighty. And the final one here, where we've got the Tran family. These are Vietnamese immigrants. We've got grandma, some parents, and three kids. They live together in a three-bedroom apartment. Now, maybe one or two of the children are adults at this point. And so the adult children contribute $400 each month to the household expenses. Grandma provides childcare, maybe for the youngest one. And so they want to save for a house down payment, but they aren't really sure how. So, what is, this idea of having a house? What does that mean? Is that, kind of part of the American dream that they want? Um, so, what's the significance there? And so, as an expert, you're saying, well, this living situation is holding you back. You need clear boundaries. Um, maybe $400 a month is not market rate. And so the adult children need to, start paying their way a little bit more, have them move out. Um, at the same time, it doesn't build credit or rental history for the kids. And so, you're making certain assumptions here, uh, but coming from a purely financial background. So when we take this accompanying approach, we've got to ask a lot of questions. How does this current living arrangement work for everybody? What are some of the benefits of living together? What are some of the challenges? If you do want to buy a house, who's it for? So who needs to be, really driving this initiative? How might you save together while maintaining the arrangement? And so really, what does success look like for this family? And why do you want to achieve it? So these are, some of the things that we need to do. And, there's going to be assumptions that the expert approach will make. There may be assumptions that the clients are making. And so we need to kind of suss those out. And so, we need to create then space for those family values to come through. And as we do that, think about what solutions might emerge as a result of that. Alrighty. So with all of that, we've got our summary here. I want you to examine your own practice and thoughts and participation in financial interdependence. We need to make it visible, both in terms of how we talk about it, highlighting it as a feature and as a reality for our clients. We need to work with the clients rather than against their efforts, and recognize that there's going to be all kinds of networks and relationships and culture and history that are bringing this financial interdependence to look like as it does. We need to recognize the impact of trauma that clients may have experienced or are experiencing, and recognize then that has to be addressed simultaneously with the financial challenges. So we need to create the safety for that and create holistic supports. And ultimately, we need to shift the dynamics of power. Not power over, not as an expert, but really learning to be more of that facilitator where we can bring in some of that financial knowledge, but the way we bring it in begins to shift as that is our contribution to a contribution and a much bigger narrative that the client is having. And so that we collaborate then on problem solving and learning with our clients. Now, one of the resources that can be really useful here for working with both the individual in the family context, the Consumer Financial Protection Bureau has something called the Money Toolkit. So if you go to consumerfinance.gov, as long as it's still available, then you can search for the Money Circle Toolkit. And this is freely available, but there are three tools, one that looks at money choices, money styles, and then your money network. And so take a look at those different tools, the instructions that are there. And so these are specifically created to explore the different relationships that and the influences that family and friends will have on individuals. And there's no prescriptive advice that is there, but it helps to facilitate the conversation and to uncover those different networks and how they're inter-influencing each other. So that is a helpful starting point if you need that. Other resources on behalf of the Financial Interdependence Project, we have some materials for professionals, and we engage in research and have colloquia discussions. So feel free to look us up, and you can send me an email down there. And there are also a couple of publications where we talk about financial interdependence. These are free out on the internet. So we've got an encyclopedia entry called Financial Interdependence, A Social Perspective. And then within the book, Financial and Behavioral Health for Helping Professionals, there are a couple of chapters where we explore financial interdependence from a theoretical standpoint, as well as from a social health standpoint in particular. Again, those are free for anybody out on the web. All righty, so big takeaways here. Financial interdependence is normal. Independence is a myth. So we need to be shifting our paradigms and how we think about it. This idea of reciprocity and cooperation and mutual assistance are principles, and they work. They help keep us afloat. Trauma and finances, they are interconnected, and we have to address them simultaneously. And to the extent that you want to be an effective professional, you have to absolutely understand your own awareness, your own socialization, and what you are bringing in thoughts and perceptions of what is right and wrong. And you need to recognize all of that before you start working with clients on financial issues. And if you're already doing it, well, then now's a good time to start doing it. Okay. Now, all of this is really important, and I really want us to then focus on this idea of unity. Unity is where what we want to establish with a client, what a client needs to be able to establish with a family, because once everybody is on the same page, once we are recognizing the reality of the situation here, then we can begin to do something about it. We can't make changes within our family. We can't make changes in our professional context if we aren't willing to work together. And so that's what we mean by unity, is a willingness to work together and to think through things. And so that's going to actually enable us to carry out the changes that we want to effect. So when we recognize that we have a shared participation in financial interdependence, we see ourselves, we see our clients navigating really the same fundamental human experiences of relationships and obligations and these mutual supports. We're able to engage with this unity necessary then for that effective transformation. And so, and to the extent that we shift from this expert model to the accompaniment model, this is, basically how I teach in the classroom. It doesn't lead to, necessarily just best practice, but it does, it's a better practice. It has better outcomes. Students, appreciate it, and clients will appreciate it well. But at the same time, it helps us just simply be better humans together. And ultimately, as we, all travel on this earth around the sun, being a better human being is just a better thing at the end of the day. So thank you very much. Here are the references if you'd like to take a look. These are from a range of different perspectives, a lot of peer-reviewed documentation here. You can pause it. Otherwise, thank you for sharing and watching. Have a good day.